We're live, or not live, but live recording.
Ladies and gentlemen.
Hey, Marc, thanks for joining us today. Marc Morin from SEVA. SEVA Commercial. Marc, we met last year, I believe, the first time. I'd seen your name floating around before, but we met through Nick Hanna at the time when I joined Leonard Commercial, and you and Nick had worked together before. And he was gracious enough to include me in a few sit-down meetings with you. So
first time having ramen.
Yeah, exactly. And I was like, "What is that, ramen? I don't know." So you guys introduced me to some restaurants that I'm not used to going. So yeah. So he expanded my horizon of knowledge. So that's good. So Marc, thank you for coming on. Obviously, you bring a lot of knowledge and wealth to this conversation. So I was really looking forward to having a discussion with you.
Well. Thank you. I don't know. We'll see what
I set the bar really high.
It goes. Yeah. You said don't set your expectations too high.
No, fair enough. So, Marc, tell us, how did you get involved in commercial real estate? What led you into that?
Yeah, I mean, luck, I suppose, or depending on what point in time you think about it from. But I was living in Calgary, thinking about. Was presented with an opportunity within the company I was working for. I worked for Xerox at the time. Had already done one move with them from Halifax to Calgary. My kids were about to start school, and I was thinking about taking another opportunity with them in a different city, which would have had us move again. And was out for coffee with a mentor and talking to him about the opportunities. And he said, have you ever thought about commercial real estate? And I said, yeah, absolutely. I'd love to own a property and maybe a townhouse or something and rent it out. And he said, yeah, that'd be good too. But how about commercial real estate? And I said, oh, okay. I thought that's what you meant. I thought that's what commercial real estate was. Owning an investment property, right? So I really had no idea. And so he was a residential agent, and he explained to me this world of commercial real estate where I was used to selling copiers and fax machines and things like that on a 5-year lease. And he said, well, companies lease office space for 5 years or 10 years at a time, and you build a database and you keep working very similar to what you're doing right now, business to business sales. It's not, you're not dealing with individuals. And I didn't even know the industry existed.
That's right.
So at that point I met with a few people in Calgary. Then my wife and I basically sat down and said, where do we want to live? Let's pick a place rather than chasing a job or a company around. Let's figure out where we want to live and make some decisions on that basis. I was from here. We came back here on vacation. I went and met with some of the firms here, and anyone will hire you in real estate because they don't pay you anything. So it's easy to get a job. So I went through that, and at the time, for me, Colliers had the best program from a mentorship standpoint, put me onto a team, worked with another young guy at the time. We're no longer the young guys in the business, but Lindsay Hockey, who's back at Colliers now.
Okay.
So we were like the two young guys working for a couple senior guys on an office leasing.
Office leasing, yeah.
And that was the start. So I was 28 when I moved back here in 2004.
Okay.
You could get your license faster back then, but just jumped right into it and joined this team, and didn't really know anything. So I spent my time mostly cold calling and trying to get meetings for the senior guys, and then go and try and learn as much as I can. But quickly learned that the best way to make an impact was to get a meeting. And,
of course. So it starts with the meeting.
So focused on that, and then I guess about that was 2004. So come 2007. I was really enjoying it and starting to see some success there, but found myself drawn towards the investment side of the business. And so beginning of 2007, I joined an investment team at the office. There was a senior guy, and he had a few others on the team.
So investment team, so meaning you're moving away from office leasing to now.
Now we're selling.
You're selling to
investment properties.
That's right.
Yeah. And so. We were coming at like this, the boom at the time following the .com crash and all of that. I think 2006, where we were seeing some of the highest valuations in real estate. It was hard not to be successful at that time. This is just before I got into it.
Yeah.
So we were on kind of a high, or the market was at a high. I joined beginning in 2007, and by summer 2007, we saw the subprime crisis start in the States, and you had the two biggest deals. I think, biggest deal in Canada happened that year, that summer. Biggest deal in North America, probably in the world, happened when the equity office portfolio sold in the States to Blackstone. So this was it was a $32 billion deal or something like that. It was just a massive deal. So we saw the two biggest deals, that one and then the one here in Canada. And then everything seemed to fall off about August of that year, 2007. Lenders didn't want to lend anymore. And so we proceeded to go for about another year and a half without doing any deals. So that was a really really difficult.
Yeah, it's a commercial time. Ebbs and flows, I guess.
Yeah. And so and it was a tough thing. I was thankful to have so one of the guys on that team was my former partner, Graham Webster, and so we kind of shook hands and said, well, the market's gone kaput. So neither of us had any business to do. So we said, well, let's share 50% of nothing, and see if we can make a go of this. And we almost didn't make it, but
when you say go of this, is you guys open the?
Well, at that point we just partnered and we tried to keep selling buildings, but no one wanted to hire us at that point.
Right.
Because we're at that point we're like the new kids on the block. We have no real experience. The difficulties of the market and everything. Our mentor went his own way and changed companies, and so anyway,
and the mentor that you were working at the brokerage side. Okay.
So the two of us basically said, let's run after anything that we can, and we kind of hit the phones. We had to try to motivate each other to keep going, and it took about another year. That was things started to fall apart in August of 2007, 2008. We went on our own, apart from our mentor, and then I think the first sale that we had was like March 2009. So it gives you a sense of the journey.
Yeah. You have to have nerves of steel to go through that and just keep muscling through.
Nerves of steel, or there's a lot of things you probably have to have. Not sure I had all of them, other than being stubborn, but and it's a lot easier to go through that difficult a time when you have a partner that you're working with, right? Because one guy's up, one guy's down, and anyway, it's a long answer to your question.
No, it's a great. No, listen, it's great because obviously anybody we talk to when it comes to business or real estate, I mean, it never started yesterday. There's always a sequence of events when you start looking at the steps that led you to where you are today. And I mean, I look at your profile and you look at this, obviously there's a lot of engagement, there's a lot of people that know you, and obviously this doesn't come overnight, and it comes from doing the right thing and repeating it over and over again, people recognizing it. So it's kind of, we're seeing the result today of all of those efforts.
Yeah, well, and I think it continues to change. I think that's this business, this industry. We've seen now a few of them where I only started in this business after the tech bubble burst, right? And so, but we've seen a number of ups and downs, but the last few years has really been something, because I was fortunate enough to be part of that financial crisis, the global financial crisis, when that happened, and live through that and figure out, okay, how are we going to make money when no one's trading, because the banks aren't lending? How do we figure this out, right? And so I think that builds in some resourcefulness. Like if you do make it through those difficult periods, and again, sometimes it's best to not. I remember I was given a book by Seth Godin at the time. What was it? It was about quitting, basically. I'll have to find it for you. But the whole idea was basically like quitting is a good thing. A lot of people quit the wrong things so that they can just focus on. So basically, it was running through these ideas of, is this worth pursuing? Like if we can make it through this, is it worth pursuing? And if it is, then you put your head down and go through. But you also need to figure out, okay, well, part of this am I going to do? How am I going to differentiate myself? How am I going to continue to do this? So yeah, it's a great, I think almost any great story has its difficulties, right? Like nobody has a clean run up to the top of the mountain.
No.
And I think that, I think what it's done for me is to help me understand that when things don't get too high when things are too high, and don't get too low when things are not good.
Exactly.
Right? And so, just and a number of times over the years, sometimes it was self-imposed, the challenges that we faced, and then sometimes it was market-driven. But it does build a sense of resilience, that hopefully you can move past whatever it is you're facing. I read the book Antifragile. I don't know if
it's so funny. I was reading that I didn't read it, but I saw it this morning as part of a recommendation list. Yeah. How was that?
It's an interesting book because we think about our kids, and you hear a lot about kids these days, and maybe less resilience and that sort of thing, right? And as a side note, my wife and I were talking about being sort of Gen X.
Yep.
The tail end of Gen X, and the way that we were raised is very different from how we're all raising our kids today, and a lot of that was you're left to experience failure and some of those things 100%. That the kids don't see as much these days. And so but the difference between resilience and anti-fragile in the book he defines as sort of resilience is getting back up, whereas becoming anti-fragile or anti-fragility is learning and getting better as a result of getting knocked down, right?
Yeah.
So take your hits.
Yeah.
But what have you learned from that, and how do you become better as a result? And so I think that leads to I like that definition better than the idea of resilience, which is not that things don't knock you down, but how do we grow from
and
that?
how do you set yourself up so to deal with those and maybe less impact as you go through
in every area. And that could be even as you do your own planning financially, you do your career planning, you do what are the areas that you you don't always want to be second guessing yourself, but you want to do kind of a full 360 analysis when you're making big decisions.
And to learn from them, and to not. It's so funny when the I have a loan right now that's in a really low, high 1% right now that I had taken advantage of when the interest rates were reduced. So we took advantage of it, and when they started skyrocketing. I remember describing this to my parents. I'm like, and we were chatting about different things and how mortgages and doing some readjustments to protect yourself. And when that happened, I said to my mom, I said, it's like somebody just looked at me and shot at me and gave me 3 years to get out of the way.
It's great.
You know what I mean? It's like I got 3 years to just readjust and get myself out of the way, but it a lot of that is learning and try to get a sense, because when you deal with banks, I've had loans with multiple banks, and when everything worked, like my dad worked for CMHC, always said if you pay your mortgage, the banks don't bother you. It's if you don't pay, or if you miss a payment, then that's when you get in trouble. And it's always interesting because you realize how when the market changes like this, where you think the bank is helping you, then all of a sudden you've become the enemy. And I've learned some lessons in the last couple of years. I'm like, wow, if I was really leveraged, holy crap, I can see how people get really stressed and go sideways. So that's why you always have to try to massage that through and go through it. So I'm going to be reading that book.
I think it's a great book, and it's, again,
it was on this morning. Yeah, it was so funny.
I think we've connected over this before.
Books
enjoying books.
I was away for a couple of weeks, and I think I usually read maybe a book a month or so. Yeah. But I'll read 3 books in a week. I just absorb it because I love. I love that
I gotta
stuff.
go back and forth between the business stuff, and then I love biographies, and
I think it's. I read the one from Elon Musk last year.
Yeah.
Blew me away.
Yeah. Well, he's persona non grata now, but the decisions he's made over the years.
It's crazy. Love him or hate him. You gotta, if you understand where that mindset comes from, it's like, wow.
And you think about the stuff he's working on now. It's amazing. But no, I think what you're talking about, that whole mortgage thing specifically, that's a great example of kind of where we're at right now, and looking at the market and going, okay, like things were just crazy post-COVID, and the market was so high. And I keep looking at these trades and some of the deals that happen over that period of time with the, maybe someone takes a shorter term. I mean, interest rates have been going down steadily for all of our careers. And to see what's happened in the last few years, like that caused a tremendous amount of anxiety for a lot of people. The amazing thing about Ottawa is you don't see that much. You rarely see people getting hurt on a larger scale, right? You have individuals who might be over leveraged, and that's unfortunate. And then from a brokerage standpoint, as you know, like, okay, how can we help them just get out? Sometimes there's no way to avoid the loss.
That's right.
Right? Depending on the circumstances. So how can we get creative and mitigate that, one way or another? But that was, I'm actually shocked that we haven't seen more trouble.
A lot of resilience. Well, I've seen it. I've seen a few where it's not fun. I've seen a few that I'm like, it's interesting when this happened. I'm a Gen Xer too, and I'd never dealt with that, as you said. I mean, interest rates are always, for most of our careers, we the interest rates are going down. That's we're benefiting from asset inflation. And I remember when you're seeing all of this, you're trying to, if you want to understand the future, you try to get a sense of what the past, like when this happened, was it the late 70s or early 80s when the interest rates skyrocketed? So I went out on a journey to find people who were exposed at that time. And I've had two gentlemen in their 80s and one in his late 70s. And I just sat down because I knew they own real estate, and just explained to me, like, what was that? How did you handle it, right? And you could feel the anxiety just talking to them on how they went through it. But it wasn't fun. So you try to learn from that and say, how do you position yourself to not be, because one mentor told me, and he had a massive hit. I won't mention his name on here, but I'm sure you know him. But and he always said to me, he says, one of the things he told me many years ago, he says, Dan, he says, people don't get in trouble because their net worth goes down. They get in trouble because they run out of cash, right? So always remember that. Your net worth can fluctuate. You'll still be buying groceries. But when your cash flow dies or dries up, that's when you're in trouble, right? So he was encouraging me to put a line in the sand and the things that I was getting exposed on, and I thought that was brilliant advice.
I think you're right, and I think it's really funny you do that, because I've in different seasons gone to seek people, again, just tell me your story more than help me out, but just to try and learn, what did you do, how did you handle that, and the interesting thing is we haven't seen a lot of the downside that, sounds like you've maybe been more exposed to it than I have, but largely for the majority of the clients that I've had and worked with in the last number of years, haven't had that significant, because there's enough, if they're buying tenanted buildings, it's hard. The big scare was COVID, obviously, when businesses can't operate, and I thought, like, this is it, this is the end, because no one's going to be able to service their debt as a result of having tenants that aren't paying. But even that, like, at that time, I went and found a book a friend of mine recommended called Zeckendorf, and it's about this developer who built, he's one of the most prolific developers in the history of the United States and Canada, built like Place Ville-Marie in Montreal.
Oh, okay.
Some of these places.
I've never heard of that book,
And he started as a broker in the Great Depression. So he started as an agent in the Great Depression.
Nice.
And it's amazing reading this guy's story and hearing his, ups and downs, and how he, again, just a bit of a wild man with some of the chances that he took. And then ended up losing everything.
Right.
as you know, I forget, it was probably the 70s or something when he actually got hit. It all caught up to him after being one of the biggest developers globally. You know, he got in trouble and lost everything.
And it just lost. That's the issue, right?
So we haven't seen too much of that in the last few years, which has been good. But you know, I've been like you, trying to see, okay, how do people pivot? How do they manage these things? And you know, for the most part, people have gotten out fairly, you know, unscathed. You and I weren't working in the early 90s when that's, you know, I remember talking to a senior guy who was an investment sales agent at the time. He said he had half the city listed, you know, half the buildings in the city, and he said he couldn't get a bite on anything, you know. And so it's not quite like that today, but it's certainly more challenging today than.
And it's always trying to balance understanding all that, but not being too gun shy to not continue. Because sometimes the worst thing you can do is just stop, and then you become so afraid that you don't take advantage of anything, right? So you're trying to figure out what's that happy medium where I'm not going to get overly exposed. It was funny because there's a mortgage that I take and one of my former bosses, is so funny, we were having a chat because he does real estate too, and I'd taken a 5-year term, and you know, at the time, hindsight's 2020, if I'd known, I should have taken a 10-year term, right, at the rates they were. And he says, like, well, Dan, why don't you take it 10-year term? I'm like, well, I said, Denis, I said, the issue is that when I took that 5-year term, I said, you're looking at Europe, they had negative interest rates. I said, me tacking on a mortgage at the sub 2%, and if heaven forbid something had happened and it continued going down, it's actually a liability for me to try to sell that asset during that term. So 10 years is a long time. Like, you don't know where that going. Now that you see what happened, it would have made sense, but you don't know. You didn't know if it was going to continue. So if you continued, you're in for 10 years. And if that asset, anything happens, then the mortgage is not an asset to you to sell. It's a heck of a liability.
Now you're strapped.
Now you're so it's
a massive penalty or whatever.
So anyway, so it was interesting.
Well, and I think that's you know, being prepared and knowing why you're doing what you're doing, right? It's not just for the cheap money. It's not just for the cash flow. It's you're thinking about, okay, what's if I need a liquidity event, how's this going to impact it, right? So it's hard to say you made the wrong decision, even if you kept that building for 10 years. If what was most important for you at the time was a potential flexibility and exit.
Well, for me, because at the time, to me it was like 10 years is a long time to tack on a mortgage that may or may not assist me. If it helps, then great. But it's a bit like gambling at that point. You don't know. I don't know where the interest rates are going to go.
And so on your new stuff, like I'm always curious about that. With the new stuff that you're building now, what kind of a term will you look for? You're going to go see an HCA, imagine?
Likely. It's all pre-approved with the MLI Select.
So if you can tie in to something, because it's new build, you probably won't have vacancy issues. You're gonna run this out. So because that's a situation where I would think that a 10-year term would be helpful.
It may be
consistency,
but I'm not alone in this building, right? So it's not just me, and yes, long term. But I mean, the one thing that's been interesting is dealing with an asset that's a bit bigger. Like this project would be like 81 units with the 2 buildings, and now all of a sudden you're talking to different clientele. You're not talking about people buying a $2 million asset. You're talking to people who have different strategies. So you may be able to get a good lift on turning it over. Not that we want to do that, but you have to leave that open because you just don't know. You get something that makes sense, and then you're like, okay, well, are we really not going to take 7-8 years of profit off the table right off the bat? Like, I don't know, right? And I'm not alone, so we're likely going to be hitting a 5-year term, I would suspect. But then again, it's MLI Select approved, so it may facilitate even somebody buying and assuming the existing loan on it with the insurance. It's already pre-set up. It may actually be an asset, but if you do 10 years, like, I don't know, it depends on the investor. It depends on who's looking at it, and 10 years is a long time. I don't know. Maybe it's just me, but
it is, and I think it's then it comes down to why are you building it? What was your intention for this? How long do you want to hang on to it?
For me, it's long term. Like there's no
so it's more about cash flow for you than
100%
anything else.
So long term wealth building and cash flow are definitely my motivation. I always compare it to a milking cow and a cow for meat, right? You want a cow that you can slaughter, or you want a cow, and I'm like, I want to milk that cow. As long as I can.
It's good to have a steak every once in a while.
Yeah, exactly. But
wash it down with some milk.
I like milk too. So it depends.
I think that's interesting, because really, if you're doing it long term, then you would think that if you're doing this because you want to just build it, pay it down, and have that cash flow, then you'd think that
it may make sense.
It might make more sense.
Maybe using this recording to listen to you, and maybe I'll change my mind.
Well, I think that's what interests me so much in having these conversations with people, because it's, why are you doing it? Like at the end of the day, are you doing this for you? Or are you doing this for your kids? Or are you doing this to make that lift and then get out, right? You could also look at opening up your ownership, bringing in passive investors that want to come in and say, hey, we're happy to take some cash flow. We don't have multi-res exposure. It's been hard to get into that.
It'll be different. I mean, in the strategy we're doing now, my partner, and kudos to him, because obviously the experience he brings to the table is next to nothing. But the partnership was meant to be agile in the sense that if I decided that the management company wasn't going to handle it, he'd be like, I want to exit. I don't want to handle it. And on the other part, I'm like, and if you want to exit, I want to have first dibs on buying your shares or getting investors in so we can keep it long term. Right? But we had an unsolicited offer come in for a certain value
already.
Oh, multiple.
Yeah.
And now you're like, and he's like, you want to exit? Or I'm like, oh, okay, hang on a second. So I don't know. So we'll see what happens. But I like the ability to not be, to make a decision and then you're stuck with it for, because these are, for me is a big asset. And unless I had a few strategic partners that would be great for long term, it'd be nice to maybe own 1,000 units. It'd be fun.
Well, I think that's it. That's my favorite thing to do, really, is to try and drill down, because I think that most of us who are ambitious and who like working and who like, whether it's building one way or another, whether it's building the business, building an asset base, whatever it is, it's like, depending on what your goal or your objective is, and that's the biggest thing that you need to say. Okay, if I say that this is all about cash flow for me, I want to build, and you're committed to that, then you make decisions that support that. Because there's always going to be, that number that someone comes in and says, hey, I'll pay this. And so are you committed to the idea or to the intention that you had when you started it, or what could take you off course? Because I think that greed drives us a lot of the time when you see that big number. But you get that big number today, and then you pay those taxes, and that's
then what do you do with the money after?
Study history, right? And
that's
say,
right.
Okay, so who are the people that you would aspire to be like when you look at the management business, when you look at the developments? Where do you look and take inspiration from and say, man, if that's what success looks like to me in 10 years, and then what decisions help support that?
1,000 units would sound like success to me.
Until you get there, and then you're going to be like, 5,000 units
would probably be good. But in today's world, 1,000 looks impossible to me, so it'd probably be a good way to do it.
Well, this is the thing. Look back at your career 20 years ago.
No, I know.
Today, this is impossible.
I love these conversations, and it's funny because during COVID, I had an unsolicited offer on one of my units, and they really had me thinking, because I was like, what? Why? And you just mentioned that. And one of the mentors, he was in his 80s at the time, and I'm like, I don't know what to do. I really don't know what to do, because the premium on this is significant based on my cost of entry. But in his mind, it was like, well, and he still owns. He's in his 80s, he still owns a bunch of real estate, and he was like, well, he says, and it's so funny. He's just, I won't say his name, but he was just like, well, you do what you want. And like, no, I'm asking you, right? Like what, he said, well, for me, I never sold anything. So he says, unless you have something else you can put the money in that's going to do a lot better, then why sell? You're going to pay taxes. What are you going to do with the money? Right? You're going to look for another asset to put it in. Yeah. I'm not going to buy a boat and a cottage. I'm not going to do that. So we had me thinking. So when you say, what am I committed to? I don't know that I'm committed to one, or I'm committed to not being committed in the sense that I want the option to be agile to make decisions depending on what comes down the pipes, right? And because the commitment can be great, but sometimes you got to be, in my view, you got to look at it again and say, okay, what is this going to do, right? But once you pay the taxes, what are you going to do with the money?
Well, I think that's it. Like, what problem are you solving for?
Right.
And that's. I think that's the biggest question you can ask. Probably the best question is if I'm solving for, my retirement, and I deem that I need this amount of cash flow, and that 1,000 doors will drive that level of cash flow for me, then and that's the mission, then that's good. But then if you have to sell, you have an opportunity to sell these, well then you're sitting on some cash. After the taxes, after now how do you replace that, right? Even though you're investing more now, but you've lost that access to the cash flow. So
I think every time I've and it was interesting because I was actually mentioning to a few people where the building we're building now, and I was on the third floor, a balcony, looking outside, and just imagining how did I get here? Like what decisions I have to make to be involved in these projects, and it's fascinating. But then it's fun because not just from a personal standpoint, but then everybody around me. I'm like, holy crap! Then we got these projects coming in. We're employing all these people. We're going to create lodging for a bunch of people that need them. And you're like, wow! Like we're doing this podcast, and I'm thinking, Mike, before we met, wasn't doing podcasts, and he's working full time for us, doing social media, whichever. So all these things as you go through, like it doesn't just benefit Dan, it benefits a lot of people. So sometimes there's that part of me like, okay, am I doing a disservice by not just keep going through? Because if I just do what I want to do, my little life, and I have no debt and whatever, that's an easy life. But is that really what it's meant to be? I don't know. I don't think so.
Now we're getting
at the deal. We'll have to do a 2 or 3 part series with you. I knew this was going to go this way with you, but no. And one of the things I always found interesting, Marc, when I was looking at your LinkedIn bio, is you write, I help clients navigate complex real estate investment with confidence and clarity. Like that's a very specific client avatar. Or is that an AI generated?
No, it's not AI generated. It's a great question because I think anything.
Well, no, but I'm sincere.
Yeah.
Like I've only known you about a year, but right from the get-go, I'm like, wow, this guy. We can go deep into conversations, and when I see that, I'm like, I know this is not just a surface level thing. It's not an EA type comment. This is who Marc is, right?
Yeah.
So explain, like, what is that, like, in your words, apart from this, like, elaborate, like, what is that, like, what's that client avatar saying, hey,
Well, I think when I look at that, or, again, you want to try, how can I encapsulate what I do in one sentence or whatever? It's I used to, when we had the team, I used to say, okay, come to me with a 1-sentence job description. Tell me what you do. But, and so you need to get a little bit bigger when you're doing that. You need to think about what's the impact I'm having, not just what am I doing day to day. And I think with that example, I think it kind of encapsulates, like you said, what I do, because whether I'm selling a property or helping a client buy a property or working with a family to discuss how to deal with these assets if there's been someone that has passed in the family and now you've got people who haven't been involved. Do you need to sell? Well, as an agent, that's generally how we get paid, but I try to think about who am I working for, and we're all in this for a long time, so very often if the family has requirements, we need to find a good manager. We need
right.
to have a good make good asset management decisions, even if they don't need to be experts in the real estate. But can I help them? Can I help put the team together that will take care of them and help them move forward?
Right.
In a way that they want to. If at the end of the day, I don't want people to ever be in a situation where now they need to have a fire sale to get
right.
rid of their
right.
assets. And so, when COVID happened, we couldn't do anything. We just spent every day on the phone, as did our whole team, like just calling in, checking in on people. What are you doing? What are you struggling with? What are your problems? And then how do we figure it out? I've at 21 years in the business, we've got some great relationships across the board, and I feel like for anyone specifically in the real estate space that has a problem, I'm probably one connection away from them solving that problem. And so that's sort of how I started thinking of myself, is like, the deals will come, but in this case, what's the problem that you're dealing with, and how do we navigate that? Like, if your problem is you want to start buying real estate because you want to diversify and you want to build your net worth and you want to grow it and you've got a time horizon that works for, great. Let's put the right people around you to help build that. But if there's an asset problem, maybe you have a property manager or you've been managing it on your own and you're not, that's not really your business. But whatever it is, if there's an environmental problem, if there's any challenge, if there's a lending issue, what can we do to find a solution that will, that doesn't make you have to rush, that doesn't put you in a position where you have to make a decision without any leverage. Right. So I think at the end of the day, whether it's you compare it to solving a puzzle, but every client is different and every situation is different. So with my experience, it's I think what I do best is probably solve problems, and do that creatively in a way that's not just okay, if this then this. It's every situation, person is unique, and I'd say that every problem I can solve, not because I'm the smartest guy, but because I know the smartest people, for any particular situation, whether you're, a specific lawyer for one situation or an accountant that specializes in a certain area or whatever that might be. I've, been blessed to have a good career with lots of, amazing people, lots of great relationships that can solve those problems. So that's kind of how I
it's
position
powerful.
myself.
I mean, Marc, kudos to you. I mean, there's no doubt in my mind why people are attracted to you when it comes to that mindset, because it's genuine. I mean, obviously, if there are people listening in or audio, hats off to you, like, for doing that. I think that's to be the solution guy, because obviously we understand, because I've been privy. It's so interesting. There's a gentleman I'm working with now. I think he just turned 81 or 82, owns assets across Ottawa, and I guess his idea was that the kids were going to take over, but the kids don't want to take any of it, and it's a real head scratcher for him. Like, what do I do now, right? I mean, and I've asked permission, because he had reached out. We had talked about selling some of the assets and whichever, and I think there's more work that needs to be done when it comes to that. But when I learned his story, how he got into where he got with his real estate, obviously he was involved in active businesses and multiple businesses. And I won't go into details because I don't want to divulge who he is, but I was just fascinated. And I said to him, I said, whatever I can do to help, whether it's real estate, anything, like, I want to do what I would want somebody to do to me if I'm ever, fortunate enough to be in your position one day. Just somebody who wants to help and try to find solutions. Whether it gets great, but just to learn the mindset of how we got there. I mean, just that is payment enough of understanding that mindset and how to do it. And we've had multiple conversations about business, family, health, which is phenomenal. So I'm sensing that what you're doing, you must get involved.
I think that you must have clients that's it. And frankly, those are my favorite. When somebody calls and says, "Hey," and we talked about this a little bit before this started, but when somebody calls and says, "Hey, I'm interviewing 5 people. I'm going to sell my building."
Yep.
At that point, if I don't have a relationship with them, and then I've the last couple of years, I've just been saying no. Like, if there's no, how are you going to make that decision, right? And well, we're going to see. And well, do you have relationships with people going in? Yeah, I know a couple of them. Like, are you doing this to check off a box to say that you got a bunch of bids on it? Because I'm just not interested in doing that. But when I'm sitting down with somebody and I don't know if there's a deal for me in it, but I understand their situation. Honestly, I think that's how I've built my business from day one. Is looking to add value and solve a problem, or help to introduce someone that can solve the problem.
Right.
And I think it's you listen to. I think it's Zig Ziglar that said, if you help enough people get what they want, eventually
you'll get what you want. Exactly.
And I've been very, very fortunate. That a lot of those times those relationships last. Right. It's not because I have the best sign or the best marketing, but whatever it is, it's because there's a genuine relationship where, I think someone's probably sensed that I'm not just in it for the fee.
No, you're trying to help, right? And you're trying to find a solution.
And so that's where that's a long answer for
how
did I come up with that line? I think that was the, it's probably been working on that one for 20 plus years.
Good for you. Good for you. No, but I picked that out because obviously, because I've known you and I got a sense that there was more to you than just, we're just commercial real estate. No, this is clearly there's a need to do the right thing and to help out in any way potential. And obviously I thought that this was just interesting seeing that. And the other thing about us, I just highlighted because I thought it was interesting because there's strategic planning on commercial real estate assets, but did you work with investors and families? So that investors and families can inherit, these assets, and all of a sudden they're like, I never managed this. What do I do with this, right? But they're investing their own capital and that are actively engaged. Like, that's a pretty specific client avatar, right?
Well, I think it's at the end of the day, there's a lot of great agents. I think in the commercial side, we're pretty lucky because we're a relatively small market. There's I think there's like 3,500 residential agents or something like that, or agents in the city, and there's a very small number of really active commercial agents, right? And so part of it for me in saying what I do is really being clear on what I don't do, and I think that for me, I've got to enjoy what I'm doing. It's and we have a lot of conversations about this at home because and I try to explain it. Sometimes it doesn't feel like I don't wake up and say, "Oh, I've got to do this." It's just like a constant what needs to happen because there's people relying on me, and so I don't think about it like, "Oh, I've got to work today," right? So I need to get this done for this reason, and so. All that to say is part of what I need to have is maybe it's my ego or maybe I'm just overly sensitive, but for someone I want to work with people for the most part where it's not just their job to cover their ass, well, I'm going to hire, and probably it comes because I lost too many pitches, being an independent, pitching against a big national firm that they're saying, well, I know they're the biggest. It's like the idea no one ever gets fired for hiring IBM or for buying IBM. Same idea. So as I drill that down and I find I get the most satisfaction working with people who are spending their own money, who are engaged, who generally have a business, like they are entrepreneurs, they're thinking about it this way, or it's a family, where there's a lot of mouths to feed or a lot of decisions to be made. And so how are we going to help structure that? How are we going to do this efficiently so you're making good decisions, so you have the input from everybody that you need to? Those are far more interesting to me than when you're dealing with somebody who has a mandate that they need to buy or sell this. And they're buying on behalf of a pension plan. All of those things are important. All of those things are valuable. But seeing as that's just not where I've had success, not where I've found enjoyment. So yeah, dealing with people who this is really important for because they're spending their money. They've earned their money to
own
make this
capital.
Decision. Exactly.
Yeah. Again, that makes a difference. Yeah, because like you said, if somebody's doing it as a job on behalf of a pension fund or whichever, it's checking a box.
Right.
But in your case, I mean, obviously you're intimately involved with the client's success, and you're trying to guide them.
And that's just like, you know, again, maybe it's that I'm needy, but if somebody is, if this is that important to somebody, then I really become part of the team. I'm an advisor, not just someone that they hired for the lowest fee to buy or sell their. And again, not that there's anything wrong with that, and I know that relationships go deeper at those levels as well. But for me, I've just found this is the area where I can have the biggest impact based on the decisions that I make, which makes me frankly work, I think, that much harder, because I know that this is, you know, this at the end of the day, people are talking about this around their dinner table with their families, and these are big decisions. Yeah. So I think, and then to that, the family side, I really love that aspect, and it can be messy and it can be challenging, but
who's the decision maker?
When there's a generational transfer of wealth and real estate and all these things, I really try to work together, put together a team, including financial advisors and accountants. And sometimes they need new accountants because it's, you know, it could have been 80 years ago or whenever the 80-year-old had relationships, and those relationships are no longer there, and that relationship's been inherited by a firm where maybe it's time to figure out with the new generation, how do we want to make decisions going forward? What team do we need around us, and how can we, you know, make those decisions with confidence and clarity? And, you know, kind of like I said, that. But that to me is one of the best areas where we can work is with these families where they're dealing with something they didn't imagine they'd have to deal with, right? And unfortunately, it doesn't happen enough that it's planned. Usually it happens because someone has passed in the family, and deal with these things weren't necessarily dealt with ahead of time.
I was actually involved in a situation very similar to that a couple of weeks ago, through a lender, trying to facilitate multiple facets of a situation of that nature. So it's not easy.
For sure. It ends up being very rewarding.
Oh my gosh, absolutely. Yeah, absolutely. And then when people can appreciate that you're bringing genuine value, you're really trying to help out, and when they can see that and sense that, I think that's as rewarding as anything, right? So,
for sure, absolutely.
So and then Marc, I mean, I feel like we can do like a 3-part series on this, so I want to respect your time, but the types of assets that you work with primarily, like what are those in commercial real estate?
Yeah, I think I'd say the majority of my experience over the last few decades has been office, industrial, retail, sort of more, you know, traditional commercial assets. I'd say primarily office for the first part of my career. Just I started in office leasing, had great comfort there. And, you know, based on the clients that we ended up working with and what they were buying, that obviously shifted in the last number of years, a lot more industrial. As much retail as I can do.
Land, I think too. I think I've seen you involved.
I've gotten involved in some land, some land acquisitions. Like, these things are fun, you know. When you're sitting down at a, you know, you're working with a developer, but sitting down at a kitchen table, you know, negotiating a land assembly. You know, like those are fun deals as well. So I'd say, you know, I try to, what's happened with a number of projects is, you know, if I don't have expertise in that area necessarily, and I look around, if it's a really wonky project, I kind of generally look around and, like, because I'm very happy to refer business if I don't feel that I'm the best fit for it. And then sometimes what happens is I'm just like, I don't have a great experience in this, but I don't know anyone I could recommend this to either.
Yep.
And then that comes down to, again, depending on the relationship. If it's the person that I have a good sense of, and it's a good client, and they fit that sort of group of, someone who's very involved and hands-on, and I don't necessarily know what the result's going to be, but I know the path to get there, right? To make things as clear as possible, and which I'm trying to think of an example, because right now it just sounds like rambling. But
no, but it's not rambling. But I think there's a level of integrity that comes with you that I mean, obviously I've sensed since I met you, where you're really trying to serve, you're trying to do the right thing, and if you sense that you are the right fit, or you know the right fit, or you find you'll make those connections, you'll do that in order to hit that, what's in the best
and I think
interest
that
of the
the
client.
point of in some of these things, and especially sometimes with the family issues, is like, this is going to be long, and we're not quite sure. It's going to take a lot of turns, and I can't tell you what the whole journey is going to be like, but I'll trust that through the process we'll get to where we need to go, and so that it comes down to trust, right? But back to your question, asset level, I've done some multi-res trades, but for the really significant ones, there's such a small group of owners in Ottawa. There's a handful of people who do the majority, the lion's share of the multi-res sales and business. So I've done less of that stuff, some smaller stuff, but and always looking to do more. But again, knowing your place and knowing where you can have the biggest impact is important. And then the last year, getting involved, starting to get involved in some development stuff, so more infill development type work, looking for opportunities, or have come across some opportunities like that where we've decided to jump in and bring in some investors into those projects as well. And that's been really exciting too. Just always learning, and you're further along on that.
But it's exciting, scary, sleepless nights, all of that at the same time.
Well, and a big function of that has been
and slow, because a lot of time it's just
and
slow.
Dealing with the city, like
it's slow. That's the patience aspect of it. If anything, that's the toughest part.
And that who your team is what makes that so important. So I'm on that side working with some people they're excellent and understand that side of it. And so we all have different roles in it. But again, that came as a result of I think I mentioned earlier, probably before we started talking, but I haven't done a pure investment deal in 2 years. And it's just because when you're doing a cap rate deal, you need to be whether you're everything is risk adjusted, right? So right now, office buildings are trading at cap rates that would have been a dream a number of years ago.
Of course.
And most of them have been sold.
Even stabilized, eh?
Even stabilized. Like people are selling 100% occupied buildings. And this is the interesting thing, because it doesn't really make sense. Why are you selling that? And I had a conversation with someone the other day, and they said, talking to a REIT, and the REIT's like, listen, we've got pressure, we've got to get out of office. So they're selling office at a discount. In the grand scheme of things, it doesn't really make a difference to them, but they're selling at a loss. Right, which is a hard thing for me to get my head around. You don't have to sell. You've got a good asset, but you're selling because markets have changed. You're overweight now on real estate. You need to liquidate. You need your allocation to be more industrial or retail versus office. So you're willing to take a hit on that office asset. And now you've got other groups that are well capitalized that are coming in and taking advantage of that and saying, well, I know there's some risk to office. However, we've got a strong track record. These are great assets. They're well leased, or fully leased, or at least well leased. They're well positioned, well located. Why wouldn't I take a run at this?
Right.
Now the challenge is financing. Right?
Financing is
come up with a lot more equity than you might have.
What are you seeing as financing? Like what's the loan to value you're seeing for commercial financing in today's world?
It depends on the asset, and it depends on, like I said, I've done a lot of owner-user type stuff, so
I think they're owner-user, I think are preferred. Yeah.
Well, this has been why I've focused on it.
Yeah, no, that's fair. No,
because these are deals that can be done, right?
That's right.
So that's, so the office deals are far more challenging, and I'm working on some right now that we hope we can find some financing for, but it's hard to blame the banks, but they make a decision based on what their asset base is, and then what they think the future is going to be, and so those things are always and you're starting to see the seller take back financing and all of these
facilitate the
things
sale.
That I remember hearing about these things, and I until more recently had only done one or two VTB
I'm involved
deals.
in one now.
Yeah, but I'd only done one or two in 20 plus years.
Yeah. Oh, okay.
Right? And then now all of a sudden,
well, if you want to extract value as a seller,
right?
How do you bridge that gap, right?
Yeah.
So it's a valuable tool, or else you're not, then people just struggle getting the loans, like you say, right?
Yeah.
It was interesting. You talk about that when you talk about allocation, and during COVID, I had a renewal come up on a building, which is the leverage was great. Like there's barely any leverage on it, and it was interesting because the bank, I wanted to switch from the bank I was. It was not a pleasant experience. So I went to a couple of lenders, and one of the lenders that helped me out several years ago, and I went to the contact, and anyway started having discussions and so on. So he says to me, it was interesting because we were going through the math of interest rates and and he says to me, Dan, I'll take my so-and-so financial institution hat off, okay? He said, I'll just tell you this, listen, this institution right now is way too heavy on multi. Unless you had all of your business here, which you don't, they won't, you can submit their application, they'll take it, they'll put you all through the gamut, they're not gonna approve you. And I'm like, what do you mean? And he says it has nothing to do with you, nothing to do with the building. It's just because we have strict instructions, like you were just saying, where we're too heavy on multi. So we're not taking on any new business in multi, whether it's a 50% loan to value or not. Like it's, even if it's a great asset, we've been instructed. So he says, I'm just so you're not wasting your time, I'd rather tell you that these instructions we're getting. So I'm like, no, I appreciate you telling me, so at least I'm not wasting my time. And I will deal with lenders that have an appetite to take on the asset, because then, even from lender to lender, it can vary. Yeah. Right?
Always from lender to lender. Now, again, the CMHC insured stuff is a little bit different. But
then you're removing all the risk from the lender for the lender.
Exactly. So on the commercial side, it's always been very much a who's got the lights on and who doesn't, and that's been part of our job is you find whichever local group is whichever had someone that said, hey, we're going big on real estate right now, and everybody else the taps are off. Well, those groups, and I can tell you, like, it's almost like a 5-year rotation where somebody's super active for a number of years, and then they shut it down, but somebody else sees an opening and an opportunity, and there's some banks that I've done maybe one deal with in decades, and just not very focused unless it's a really good client of theirs.
Well, exactly. And that's the sense I got.
That's when they'll come
if you're an existing client, then they tend to work, if they like the client. But
and not always, but so all that to say is, in this last period, I've found that the stuff that I could recommend to investors was not. And investor clients changed. We spent a lot of years early on, did a lot of business with syndicators, people raising money for their investment deals, like on a deal per deal basis, and that went really well. And then started doing a lot more as interest rates kept decreasing, and those deals were getting skinnier and skinnier. And a lot of those guys went in to start doing development work, and you can sort of see through the city who's evolved that way. Did a lot more work with private individuals who were buying, multi-million-dollar assets themselves. And then COVID hit, and since then we've seen a bit of a return of the syndicators. People, now people are getting more and more sophisticated. We've got a number of real estate funds that people are raising to be able to act quickly and not have to go out on every deal and do a new raise for every deal. So, as we've seen the private investors get a little bit more sophisticated, syndicators back, they're willing to take, they're getting much better deals. They're risk adjusted, obviously, but like I said, these are some of the groups that are coming in to look at these office buildings. For private investors, I'm seeing a lot more opportunity to jump in as a part of a development deal. And so, over the last couple of years, done a number of development deals where people can participate in some of that upside. And the structures are a little bit different. You can still get into trouble.
I don't know. Listen, there's risk.
But I think that's been the thing. So I've never tried to pigeonhole myself and say I'm just an office guy.
No, that's good.
And the brokerage world, they try and say, just be the expert in that one thing. But I think that's harder in a city like Ottawa. And the reality is that it's nice to be able to pivot to something. If you're an office expert and no one's trading in offices, then it can be real
100%. Depending on the market and all that. So no, that's great. Hey, Marc, you've been very generous with your time. I think anybody who listens to this has any interest in what we're talking about. I mean, if they're not getting the grasp of your experience, I don't know what else we need to do.
Well, I'm not sure if it'll be helpful, but I hope it's good for someone at least. At least we got to hang out.
No, that's good. Yeah, we're looking for a reason. And if somebody needs to reach out to you, I mean, we'll put the links in the description. But so what's the best way to reach out to you?
I don't do a lot of social media, so probably LinkedIn.
LinkedIn, Marc Morin,
LinkedIn or SEVA Commercial. What is it? SEVA Co. So that's something when you start a company. So it was sevaco.ca is the
sevaco.ca.
Yeah. So for SEVA Commercial, I wish I would do that differently today because everyone says, "Well, what's Sevaco?" So live and learn, right? You buy that handle and then you're stuck with it.
And then to change everything. I get it. So,
exactly.
No, that's good.
Exactly. Thanks.
No, this is great. Thanks, Marc.
Thanks so much.
Thank you.
Have a good one.
This is a lot of fun, eh?